Good evening, everybody. Welcome to tonight's Inner Circle Live. It's fantastic to see you all here. I hope you're well. I hope the Christmas preparations are good. And of course, it's a pleasure and a privilege, as always, to see you here. It's always massive respect for those of you who rock up, be it on GoToWebinar or YouTube Live or watching the replay on YouTube later. Then you're always so very, very welcome. I feel very blessed that I've had such a wonderful group of people to work with over the last 12 months. And thank you, of course, to everybody who said hello in the chat already. It's always so appreciated that you invest time in doing that. But before we kick off, of course, we're just going to give you a little important message to just make sure that you know that this is done for educational purposes only. We are looking at live markets during the session, of course, and discussing what could happen next. So as we look at whether Santa Claus might be coming to town or not, please remember, due diligence is required. Make sure that you check out anything that you hear and see. Of course, manage risk on every trading action. That's on entry and exit with whatever you do. And make sure this is consistent with your own personal trading objectives and financial situation. Obviously, what you hear today can not be described or defined in any way, shape, or form as being personal advice to take action. You've got to make that decision for yourself. Thank you very much. Whoops. Stepped forward a little bit there for some reason. Let's just recognize those who have said hello already. G'day, Hugh. I hope you're well. Great to see you here, Neil. I hope you're keeping fine, young sir. And Sonia, wonderful to see you here. I am well, Keith. Thank you very much. G'day, Roger. I hope you're good too, buddy. Always great to see you on so many of these sessions, as with all of you. But whether you're a reasonably newer comer to Inner Circle or whether you're a regular, you're very, very welcome here. Now, today's discussion really is, as always, we're going to have a look at live markets, but really it's sort of integrated a little bit into today's session. Normally on these sessions, we have an educational component and then a live market component, usually towards the back end of the session. But as I said, these will be integrated to some degree. Remember, this is your session, not mine. So if you have any questions or comments or anything you want me to have a look at, please ask. G'day, Johnny. Thank you for saying hello. And of course, thank you also just to check in on you guys in YouTube. Thank you very much for that. If you are watching YouTube now or later, let me just pop a little message in there too. Then it'd be great to, it'd be wonderful if you could just push that like button. I'm getting harassed by Grammarly here. Go away. There we go. Okay, so let's pop that. Now let's get into it, shall we? Obviously, at the end, we sort of do a sort of markets now. As I said, a lot of this will be integrated in what we're saying as we go through. So much of what we'll discover later will be that. But finally, also we've got some US data that's been released. We've been waiting for jobs data. Those who are cynical would suggest that perhaps this has been deliberately held back since the government shutdown happened some time ago. But also, of course, we've got some big data coming out too. We've still got continued central bank action, which has been a theme really over the last couple of weeks. Just watch the BOJ for Friday. There is an expectation they may raise rates. Seems to be the consensus at the moment. If they do so, there could be a significant market response. We'll talk about that in a moment or later on. We'll have a look at gold and cryptos and oil. And of course, look around and see if there's any charts that are worth watching now, maybe setting up with some technical pictures of interest, shall we say. So that's all later. As I said, thank you to you all for rocking up here. some very, very familiar names and some less familiar ones, but either way, you're so welcome. So let's start by asking about what Santa Claus rallies are. Well, Santa Claus Rally is a historical phenomenon, which I guess can be described as a seasonal tendency rather than a guarantee. Some would suggest around about 1.5% approximate gain historically, but it really kicks off during the final trading days of December and into the first few sessions of January. Debate about exact dates, but really from next week up until the first week in Jan, that's when people would look at it. And once the new year is gone and the first couple of trading days, then it's generally considered to be that window that we're looking at, even though I obviously can't spell Santa. I've got to correct them. I can't do that, so now can I? That's a travesty. There we go. Let's do that. There we go. We've got it. We've got it as it should be. Hi, David. Good to see you here, mate. So that's what it is. And so there's a higher than average probability of positive returns in this window. There's a few reasons why that is the case. Markets at this time, there's low volatility, smoother price action, usually less data coming out because of the increased holidays. But it's by no means a given. There is generally a stronger performance in markets that are already in an uptrend, and macro uncertainty is not dominating headlines. We can debate that, and we will in a couple of minutes. It's also helped by a little bit of portfolio rebalancing, tax-related adjustments, potential optimism as we move into the new year, and generally speaking, could be French. And generally an optimism about the year ahead. January is a really important month in terms of how years tend to pan out. If we get a good January, the years tend to be good. Again, looking at one of those market tendencies rather than absolutes. So in discussing this, it seemed logical to look at what it looks like historically, but also talk about some of the headwinds and tailwinds. We've sort of referenced there. When we get these stronger performance, the question is, of course, is it setting up for such or not? So let's just sort of look at this, and I've got to credit Alan Kay for this because he's done the research on that, and it was really interesting. Looking at the last 10 years, you can see, generally speaking, we've got all but two over the last 10 years of the in the US markets, because generally it refers to what happens in US markets. But this, the Australian markets has only had two as well to the downside in the last 10 years, and a couple of really major spikes. So interesting indeed, and thanks, as I said, thanks to Alan for this, because it's a very, very well put together slide. Many of you who are in the Melbourne investment group know Alan very well. So this is sensational. So that's what it looks like. So it's not 8 out of 10 on both indices is not insignificant. The question is, we don't know for certain either way, what are the signs? What sorts of things could push it either way, and how would we prepare ourselves for either scenario or nothing happening? You can see with the US that particularly it's a lot flatter than the Australian response to this time of year. 8.4 was a doozy, wasn't it? Anyway, let's look at that. So what could happen? Well, it's really early days. I know we're sort of on the 17th of December, and thank you very much. Yes, it is birthday. How did you find out? But anyway, so it is early in the piece to be making a considered judgment. Usually we're sort of looking towards next week as we move into Christmas week to start for things to start to happen. But as I said, I've already said that historical criteria suggest that it's more likely to happen when markets are already in uptrend and uncertainty is not dominating the headlines. The reverse, of course, is it's weaker during bearish markets. The actual or potential for a major macro shock and liquidity is thin and sentiment is fragile. So you tell me, what's here's the Nasdaq. How would you describe that market? We are in long-term uptrend if we look at the 200 MA. I mean, even if we sort of pop this onto let's pop it onto 100 EMA, we're still in uptrend. But we have had these retracements of late. So big early pullback, really since the beginning of November. Saw a spike again towards the back end of November, early December, back up to within 1.5% of record highs, and then we've had this retracement and bit flat action over the last few days. If we look at the S&P 500, very much range bound over the last sort of month, I would suggest. Again, we had this, oh my God, what's the Fed going to do downside during early November with the rally accordingly, and we actually reached a record high. So context is always important. And so if we look at record highs on the futures, it's down less than 2%. Today, the futures are looking a lot more buoyant than they were early on. We could be having a bounce. I think it's early to consider any sort of entry into this. But it does smack of, well, it's sort of okay, but we're not sure. And put this into context. What's happened over the last 2 days? You tell me what's happened. Yeah, absolutely. Jobs report out of the US. So we had the non-farm payrolls come out. The worst figure since 2021. That's Biden's fault, is it? Anyway, so this is an interesting market and one which is I shouldn't put this chart through. Actually, on the we did a session on Monday, which is fantastic. Some amazing people there on AI and business stroke trading, and I showed them this little trick. And if you ever wondered the power of AI, what we'll do? Shall I do this? I'll do this because this is just pretty special. So what we're going to do is we're going to pop this little chart. It's going to be too many bars. What we'll do, no, bars are probably important for context. What I'm going to do, give me a second. I thought this was staggeringly good. So we're using the power of AI to make a judgment. Just give it make a judgment. Market phase analysis. Okay, so I did a market phase analysis, seeing if it could interpret charts. So can you repeat this? On this chart. So what it's going to do is it's going to do a market analysis on this. Okay, so it's going to do a summary of where it is, etc., etc. So what sort of market phase it's in. So let's just show you this. For those of you interested, I'll share the prompt. So this is what it's doing now. Okay, so I've asked what's going to happen in a short-term horizon, so next 1 to 3 sessions. I'll actually expand this. So look at the probability scores in the next 3 sessions. 1 to 1.5% up 45%. -1 to range 30%, and then down 25%. Okay, so what we're going to do So there's a control back inside a control pullback inside an uptrend. Okay. So in probability terms, buyers and watch sellers need proof environment. So are we going to get the proof? What do you think of that? So you see what it's done with that prompt that I've previously done. So it's given a current context, a probability weighting on primary trend, short-term momentum, candle structure, support, volatility, mean reversion, and probability estimates. What would shift the odds and the bottom line of where it's in now. Thoughts? Is that impressive? Anyway, so that's where we are. But my analysis, and if we stick it into AI and see what AI thinks for the next 3 sessions anyway, the headwinds on this are this. The major headwind on this is this. So if we look at what's coming out over the next few days, so you can see here we've not a great deal coming out later in the day. Interesting, really interesting. The GB pound's been splattered on this. Massive low inflation. And grossly under what was expected, 3.2. And isn't that handy because the Bank of England are due to report tomorrow, due to meet tomorrow and give their official bank rate that was already 0.25% priced in. One wonders whether they may even go harder than that now on the back of that CPI number today. So really big data tomorrow coming out of Europe because of also what the European interest rate decision. No change expected in that, still expected to stay at 2.15%. The press conferences will be interesting as well. On top of that, we've got weekly jobs. It'll be interesting to see if that continues the decline we saw. So the highest unemployment rate since 2021. I know it's the headline number, but it did reinforce that things are under pressure. And then this. Here we go. The BOJ. The BOJ are expected to potentially suggest that they're raising rates. They've had data which is supportive of the ability to do that. And they've been sort of telegraphing that to some degree. Now, the surprise raising rates, now this won't be a surprise. Surprise raising rates July last year created some major market havoc. Initially, we got an unwinding of the carry trade, significant drops in stocks as a result. Obviously, the yen was very strong. The yen hasn't been particularly strong of late against most currencies, but this will be a game changer on Friday. And now it's not the other game change, not the only game changer that kicks around, because as well as that weekly employment, this is the big number here. Now, 3% is psychologically important. We are expected to tick up to 3.1%. Now that doesn't seem much, 0.1% doesn't seem much, but if it does go up even higher than that, then the fact that it's gone up over 3% and added some could be significant. Already the likelihood of a Fed rate cut in January is as low as 25%. All of those things are potentially concerning. And could scupper sentiment. So despite that generally sort of pullback in an uptrend vibe that we're in now, the macro uncertainty may overtake the technical picture, particularly if we do get a significant response to any BOJ decision. Best scenario, CPI comes in at or lower than 3%. And the BOJ decides to pause any rate decision. If that happens, then I think we're probably got some clear sky into a good place. Let's look at these in a bit more detail. So current potential Headwinds, as we've said, the rates narrative is still unsolved globally. Markets have priced in cuts. Certainly have priced in cuts in a lot of the FX pairs. The US dollar's up and down fairly significantly. It did hit a really, it has bounced off a support. And what we're seeing is any change in sentiment at all, any change in telegraphing is creating quite a response. So if we look at the S&P 500 as a result, I mean, this was the likelihood that the Fed were only going to do one rate cut before, so one rate cut this year and probably not in January was the response. Yes, we did get the bounce, and then we got some AI narrative playing into that as well. So watch the BOJ, watch BOE tomorrow. Be interesting to see what the ECB come out with as well. So lots of central bank action unresolved, and of course that CPI is going to play into any decisions about may happen to the Fed, but I don't think the probability is going to move significantly for Jan. Obviously, we are pretty near record highs, and there's been much made of some of the valuations, particularly, of course, in stocks that have led. So US large cap are at best saying the good news is priced in, and at worst saying that the stocks, e.g. AI stocks, are overvalued. And really, that Magnificent Seven, which occupies such a major part of the market cap of the US indices, means that those indices are reliant on a fairly narrow group of stocks. And if we get further AI concerns, and you only need to look at the Nasdaq to see the difference in these concerns. If we just pop that up. So the Nasdaq, although it's, if we look at where it is off its highs, it's heading down to pullback territory again, around that 4.5 to 5%. We breach this level here and start to head. I don't think it's going to be long before we're heading down to here. So all we need is some tricky interest rate narrative, high CPI, for example, some more AI conjecture. Then we may see a significant fall off. So the next couple of days, the next 1 to 3 days, are really, really important for stocks in terms of what their short to medium term outlook may be. Now, if we look at, there's by no means a capitulation. If we look at some of the outperforms last night, of course, it was Tesla, Nvidia, Microsoft, Apple, Amazon, all looking okay, whereas and Facebook and the rest of the market was looking pretty shaky. So the gains that we saw were primarily in the Nasdaq. So it's by no means a sell-off of stocks. And some may say, well, look, it's an opportunity. If we look at the Nvidias of this world, which we can do if you'd like me to. Airlines. This is one of my charts of the day from million a week. So there we go. There's Nvidia supporting. It's showing that this support level at 175 looks fairly robust. So one wonders whether we've got some accumulation from institutions around this level. Well, certainly in this zone here. In terms of a retail bar, I'm not sure there's much retailers coming into this, but maybe move over 182 suggests that 200 is on the pipeline. But this doesn't look like a stock in trouble. It looks like a stock consolidating. And so that's the key message that I'm seeing. But if there's any further pressure on those stocks, that leadership concentration is a risk to markets overall. Obviously, the macro data sensitivity is elevated not only because we had that delayed data, which wasn't very good when it actually did come out, but also with that inflation number. We've still got some weekly jobs to come out. We're not going to get any growth surprises to the upside, I think, because earnings season was pretty spectacularly good, and that's one of the things that's helped keep US markets buoyant. But sort of interesting in terms of where it is. In terms of tailwinds, does we need to be balanced? Trend structure remains constructive. As I said, the major indices are holding above key medium-term averages. Bias is still upwards, not corrective. At worst, it looks like a sideways trend we might go into for right now, but of course, the next 2 or 3 days I've referenced already. Volatility is generally contained at this stage. If we look at the volatility on Nvidia, for example, let's look at it all on the Nasdaq. You can see volatility has actually dropped, so around about what is an average level. If we look at the maybe look at the USD, you can see there again, same story with S&P 500. If we say this, the average is probably around this level here, about 70, then we're sort of sticking. We are actually sort of around about that average now in terms of volatility if we're using the ATR as a measure. So volatility isn't suggestive of a market that's upset. If we look at the VIX, even, yes, we had a spike on the back of that dreadful jobs data, but really, again, this is below historical averages for the VIX, which is around about 19.5. So there's no sign there that the market is scared, that fear is increasing. It appears to be a fairly mellow market at the moment. The tax loss selling pressure is mostly absorbed. The thinking is that most of that happened when we had that pullback in November and earlier in December, and that's potentially also reduced any downwards and any downside pressure. And the thinking is that there's still lots of cash sitting on the sidelines, both institutionally and from retail, the retail side. Obviously, if there is any evidence of buying on dips, and we have got evidence that things are supported, we've got multi-week challenges of key levels, then we're potentially not in a bad place, that if we do get any buying pressure that happens, we could get support of that. So let's just have a look around the other major asset classes. Let's have a look at the USD, which obviously, as I said, was under significant pressure. We hit the lowest point since the beginning of October. And of course, we've got a little move up today. So despite that weaker jobs data, the US dollar responded not by, well, that's more likely to, that's not a good thing, let's have a flight to safety, but that's actually really continuing to be bad for the US economy, which is not so good. We've had a bounce today, which could be a bit of a profit take, which is a fairly significant move to the downside. Here's gold. Record highs in sight in the process. We're just grinding up with gold. Not surprisingly, we've just sort of got a little twitchy as we get closer and closer to that 4364 level. We've had a 4-week attempt to break through 4310 with any vigor, but that hasn't happened to date yet. So we're watching that level. Copper is sort of interesting. We're in a range at a high point not seen since the end of July, which was, of course, was when Trump imposed his 50% import tariffs. Oil's been a concern. Here's the weekly chart on oil. So we've breached a 4-year low on oil. We have got a little bit of a bounce today, possibly again a little bit of a profit taking. These are levels not seen since early 2021. Pop it on a monthly chart. You can see there. That's when we're last here. That was actually February 2021. So the drop through that 4-year low is technically significant on oil. It might be interesting. Nice bounce though. The commodities seem to be doing well today. There again. So we're almost at the point where we're challenging yesterday's highs at 56.68 on the WTI crude. Bitcoin is all over the place, but Bitcoin, I think, is only just a little bit of pressure. So we dropped this 36% to the downside. We covered a little bit of a retracement up to around about this 95,000 level, but now we're retesting that again. There's the range drawn on that range tool. 3 attempts to breach 86,000 without success, or without holding it. I've been watching this this low close at 84,300. Now, just again to put this in context, so this is lows not seen since the start of the year, or since early part of the year. So this was the Trump bounce when Trump and Elon were friends. And then we got that pullback early part of 2025, where it sat there for a little while, and then of course we shot up to test to create record highs. But that drop, that sort of lowest point in 6 months or 7 months is significant in Bitcoin. If we do breach this level, you can see the severity of that. We could be almost down. I mean, we're down 35, 36% already. We could end up being down as far as 70,000 if this selling pressure continues. I don't think it will, but it just sort of smacks that this isn't a comfortable place to be right now. People have moved money out of Bitcoin into Trump coin. Anyway, so in terms of where the major assets are doing, the risk on assets, apart with the exception of Bitcoin, aren't doing too bad. Oil is dropping because potential economic slowdown is impacting demand a little bit. Gold is doing okay, copper's doing okay, and the major indices are doing okay. So sentiment is not fragile. So that would support the bullish case. But the reality is that significant data could change things and change things quickly. So it's not really very clear like that now. But there are key levels under test on various asset classes. You saw it on oil. You saw it on gold. I mean, even though it's doing very well, there is a big fat resistance above where it is, which albeit record highs. Bitcoin is at a key level. We look at some of the big stocks, big tech stocks like Nvidia, there at key levels. So the next few days are going to be critically technically as well. Let me just have a quick look. I haven't had a look at the Tesla chart for a few days. There we go. That's why I should have, shouldn't it? So Tesla's flying. I thought it was looking pretty good. But that is a great place to be. Tesla are a fantastic company in terms of where they're going. It's nothing to do with cars. Those of you who've heard Cameron Malik talk many times will be very familiar with his feelings on Tesla, heading towards $500. So that's undoubtedly an outperformer, one that's noteworthy. Just have a look at Microsoft, one of the other big boys. So Microsoft, very sort of Nvidia-y. We've got a 200 MA sitting here. To the 200, yeah. So it's trading around that after this pullback. So we're seeing this in a lot of asset classes. So to see something that's breaking that mold is actually really quite interesting. There we go, we've got the full chart. So we're in a pretty clear range in Microsoft. And I'm guessing if we looked at Micron was one that sort of caught my eye, but again, looking at this sector, they're all doing similar stuff. So pull back to say, let's take a breath. Let's see where we're at. Google. Let's just get the full picture here. There we go. So you can see it's quite conceivable Google is going to come back and test this level here at 300. And we'll look at the let me just change accounts actually for some reason. ISX stocks as well. Tell me all sorts of stuff on the scanner. Once I just reinstall it, I can do that. Let's have a look at the ASX stock. Okay. Let's have a look at a few of these. A few of them we've been tracking. Flight Center we've been tracking for a few days now, and that just continues to grind everything. That's worth watching. For sure. Banks have been under a bit of pressure. If we look at the big banks, but seem to have found again that common theme that large cap stocks are finding good places to be after pulling back. And I think that is probably not too bad a place to be. Let's just have a quick look at BH. Why is BHP not on it? Okay, let's look at FMG. So look at Fortescue iron ore stocks not doing bad. Nice buy there. Just put there. Not quite happen yet. We tried to trail that as well. So yeah, iron ore stocks are doing well. So generally speaking, again, the ASX isn't in a dreadful place. A few stocks are looking a bit shaky. So I think the next 2 or 3 days, as I said, are critical. So the assets to watch, I would say, if you're looking for long gold, potentially copper. Look, if you've got range bound grading, there could be a really nice bounce on oil. Should we get back into this range? May end up being around about $60 again, but I wouldn't touch that. Don't like Bitcoin. I do like copper. I think copper's a nice range bound trade, potentially back up to 550. If we reach 550, the buyers could be in. If we look across some of the major asset classes, USD really strong today, as I've already said. But this, if we look at where the USD is, it's sort of holding on by its fingernails to a sort of key level there. So don't like this at all. I think it's going into a little bit of a sideways thing. Oops, didn't want that. Let's just put on GB pound yen. So the GB pound's dropped on the back of that, and on the back of that weak CPI, but it's not capitulating, which is sort of interesting. So if we look here, we're sort of equal ranges. So we found a support there, which corresponds to here and here. So again, I'm not really jumping up and down about a sort of potential opportunity on that. I'd like to find a chart of the day, but let's look at the Aussie yen, which I do think has some potential, but I think you're going to have to be patient with this. It's testing a short-term level at 103. I would ignore that until it gets up to about 103.18, 103.20. And then I think that's the high probability trade. I think for those of you scalping, of course, gone in the market, you could trade that, but I'm not jumping up and down about that in any way, shape, or form. But if we look at the Aussie US, this is the other one I think could have some potential. Let's just put it on the hourly chart. In fact, let's put it on the daily chart to start with. You can see the turnaround in this. I suspect that this might be a bounce off this level at around about 66.15. This stage, we're seeing the early signs of that potentially. It is called support for a reason. But I think there could be a short-term opportunity here, but it's going to potentially grind its way up. So that, again, that's not massively compelling, I have to be honest. If we look at the GB pound Aussie, you can see here there's a really important technical levels. This has been honored at 201.20. I think this is possibly the most technically clean chart we've seen today. So a breach of 201.20 to the downside, sees us down to 201 straight, and then potentially through. But we are seeing this potential bounce in play on the GB pound Aussie. So I think there's a couple of points here of interest. So potentially a smaller position up to there. That one, 201.51, and then accumulate into that should it breach that level up to 201.85. That's my FX chart of the day, somewhat unconvincing, but that's about as clean as I can muster. And let's just have a quick move up that. Let's just have a quick look at. So look at GB Canadian dollar. Oh, hello. Maybe it was a little premature on that, or maybe not. Here's the daily chart on the GB pound Canadian dollar. Really nice support on the daily multi-time frame breach here. 183.42. We're looking at the 4-hourly. You can see how that's interesting at a really key level. And of course, on the hourly, we've already got some price action around there. I actually like this even better. So new chart of the day, or extra chart of the day, GB pound Canadian dollar short if we breach this level, 183.40. I think the multi-time frame nature of this is likely to support some selling pressure being done. Even that's not bad as a bounce back from time low. That space compared to say the GB pound Aussie is quite significant technically. So yeah, there's my new chart of the day. One to watch for tomorrow on the ASX. I quite like the way IEL is shaping up. Potential move up to 670. This has been trading in a range for the best part of 2 months now. I think that move up looks interesting. It's not going to break any records, but I think that breach followed through by this takes us up in the first instance to around about 7.6% of the upside, and then ultimately 14%. So short term, I'd aim for that first. Long term, maybe that IDP education, do international student placement, English language training, all that sort of stuff. But that looks good. It's a stock that bottomed out and then looks sort of interesting. So that's my chart of the day for the assets. Right. Okay. So markets now. We've covered this. We've covered the CPI data. As I said, we'll probably cover most of this as we go through, as we went through. As I said, watch the BOJ on Friday. That's going to be interesting. Oil price will be interesting because we have, despite the fact that we've got those wicks underneath and not quite at record highs, we're not that far shy. And crypto and all the next move is really, really interesting. I've had a look at some charts. Is there any charts you'd like me to check out at all? Then let me know. I'm just checking through questions, just see if I've missed anything along the way. Sorry, I've just seen that GoToWebinar. Does GoToWebinar frozen? Are YouTube in still? I don't think GoToWebinar is frozen. Can you hear me? Let me know. Yeah, just drop a message in the chat box. Anybody? Okay. Any thoughts from anybody? Let me know. Always good, thanks you. Okay, so I think that's what I was going to cover today. I hope that's okay. As I said, I wanted to give you a where is it now sort of scenario, as well as some things to watch. Now, just a note on Christmas scheduling. Thanks, Brett. I don't think that's a bad move, David. Many people would consider just to take a step back over the Christmas time. Right, Christmas scheduling. Let me just talk about that for a minute. I am going to run AI and trading. Those sessions just seem to be going down so well at the minute. So I thought I might do an AI and trading session, likely to be Monday, in a circle next week. And then I usually do an outlook for 2026 on in between Christmas and New Year, which is all really, really well attended. So I'll do the same this year. I'm not sure whether Monday or Tuesday is a better day. I'm sort of thinking I'll make a decision tonight on that. So keep your eyes peeled for a change in a circle. Also have to tweak live updates. Now, for those of you not part of live updates, get there if you can. There's a session tomorrow each time. I will send you the link. You're likely to be already registered, to be fair. But just in case you're not, I'm putting the link into chat right this second. So it should pop up. If you're not part of that, it's 12:30 kickoff in Melbourne. Now, usually they're on Mondays and Thursdays, so I might obviously Mondays will be fine. Thursday won't be, and same for the following week. So I may do a may have to reduce those, I guess. Christmas Day's on a Thursday, isn't it, from memory? So yeah, I might have to just trim down those a little bit. So the likelihood is that there'll be a one live update, one in a circle next week, but the dates will be shifted. Make sure you look. I mean, I think the reason why the session in between Christmas and New Year is so well attended is that people are sort of ready to look at it again after all the excesses of some wonderful times. So just keep tuning that. I'll try and send reminders accordingly. Outside of that, of course, on YouTube, you're going to get charts of the day. I might even do a little video on BOJ tomorrow, which will be released. And those of you part of the AI stuff outside of Go, then so the EA stuff outside of Go, then we've got sessions tomorrow and Friday, depending on what groups you're in. And so I will make sure that you're informed accordingly. For those of you who want to drop me a message, you can use any email you have, put my Go one in. So it's mike.smith@gomarkets.com. Put me a line at any time. It's always great to hear from you guys. And I'll pop it into YouTube channel as well. Although that doesn't make any difference for me, does it? I'll pop it in afterwards. Because the live stream's finished, the live chat disappears. So should really have a look and just make sure there's not hundreds on there. I don't think there is. No. Okay, so yeah, so that's probably it for today. So make sure you have a wonderful time. What I would suggest is position with flexibility potentially works. Difficult to call. As I said, I think the next couple of days are really key. There's so much coming out that's influential. But as I said, if we do get any sort of rally, there are opportunities. Watch for those things that are sitting around support levels or near resistance, either for a bounce or a breakout, respectively. And most importantly, enjoy the rest of your Wednesday. Thank you very much for being here. And thank you much for your continued support. And I'll move and leave you. Catch you again very soon. Take care of yourselves. And bye-bye for now. Thanks, Johnny. Take care, mate. See you soon.